You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Welcome back to the Infinite Banking Mastery Podcast. During the last episode, I showed you 3 problems hiding inside the saving strategy most Americans were taught to rely on. A short window of access, a growing tax liability you can't predict, and a fee you're paying on money that isn't yours. Something I hear all the time, and by the end of this episode, I'm sure it's something you will be thinking too if you haven't already been thinking this, and that's, why didn't anyone tell me about this sooner? So let's get into what the ideal savings tool looks like, and then we will compare. I want to revisit the list I went over in last week's episode and remind you what you should be looking for in the ideal savings tool. First of all, guaranteed growth. Who doesn't want growth on a guaranteed basis? Tax-free access, not just deferred, but accessible income tax-free. Liquidity, on your terms and for your lifetime. No contribution limits, no market losses, creditor protection, growth that continues even when you access the money. Living benefits, so you have protection while you're alive, not just when you die. And a legacy that transfers to your family without the delays and costs of probate. There is exactly one financial tool I know of that checks every single one of these boxes, and that's been hiding in plain sight for over 200 years. A whole life policy. And when built a certain way and structured correctly, it becomes what we call your own private banking system. Now, you can have a whole life policy built in a more traditional way, and it will still build cash, and you can use it as a private banking system. But there is a way that we're structuring these policies to give you access to cash more quickly and to be able to start financing things that you need to finance or run the money through for different investments or to pay off debts to outside banks. So now let's go over the items in the list I just stated and compare it to other options that are available to you. First off, guaranteed growth. What other savings option has guaranteed growth? Well, a savings account, although that's a pretty small level of growth, a money market account, which is likely to do better than that, or a CD, a certificate of deposit. Those 3 will have growth on a guaranteed basis. Tax-deferred and tax-free access. Well, an IRA or 401k will be tax-deferred, but they will be taxable when you begin pulling the money in your retirement years. A Roth IRA will be accessible tax-free in your retirement years. Your earnings will be tax-free as well, as long as you've had the account open at least 5 years. So there are some rules with this one. I would say it's the second best way to build retirement savings account that will be tax-free if you want to have savings in the stock market. But of course, this account still comes with market volatility. Liquidity, full liquidity for your entire life. With a whole life policy, your cash values are accessible from day one and at any age 35, 55, 75, 85. It doesn't matter. There are no restrictions. No 10% early withdrawal penalty. So long as your contract has not become a modified endowment contract, there's no government mandated window. No required minimum distributions, forcing money out on a schedule you didn't choose. With whole life, you are in control from the first day to the last. A major difference to just about every other option available to you, besides a regular savings or money market account. Of course, money that you have invested in the market is also liquid, although it may not be the best time to sell when you need the liquidity. So liquid, yes, but not as carefree of a location when funds are needed. Contribution limits. There are no income phase-outs with the ideal savings tool. Market-based retirement savings accounts cap your annual contributions. There are income thresholds that also phase out your eligibility, making it so that you can't contribute at all. When it comes to whole life, there are no income thresholds that would keep you from being able to participate. If you are a high-earning executive or a business owner in a strong revenue year, this might be the year to begin this savings concept. You can fund it aggressively while you can, and if you're concerned next year's earnings might not be as high, you can easily drop the premium down. You just can't increase the premium into your existing contract without causing a mech. So I often tell clients, if you're wanting to start and you're not sure the amount, start on the higher end of your budget because going down is easy, it's no problem, and you can even go down and then back up. But if you start on the lower end thinking that you might want to increase it next year, now that's not going to work. You're most likely going to do something that would cause your policy to become a modified endowment contract and become taxable, and you're not going to want that. So starting on the higher end of your budget is better and easier moving forward than starting on the lower end. It's not the end of the world if you start too low. You just would need to start another contract. Okay, also, there are no age restrictions on your contributions. You can continue funding this tool as long as you are alive. There are no requirements that state you need to be earning an income in order to continue funding. There are income requirements when you first apply. The income to fund has to be coming from somewhere. You, your spouse, another family member, a business partner, etc. But once it's in force, you are able to continue funding, unlike an IRA or Roth IRA, which require you to be earning in order to fund. No market losses. I think this one speaks for itself. I'm sure if you were writing a list of all the characteristics you would want in your ideal savings tool, not being able to lose money would be right at the top. Creditor protection and privacy. In most states, your cash values are protected from creditors. You would want to check with an attorney in your state. For anyone in a high liability profession, such as medicine, business ownership, or law, this is not a minor feature. It is an important layer of financial protection. And unlike many other financial accounts, this does not get reported in the same way. The government is not made aware of your cash value totals. You don't receive a 1099 at the end of the year. It's private. Uninterrupted compounding. My favorite feature and a favorite of many infinite banking practitioners. When you take a loan against your whole life policy's cash value, your full balance continues to earn interest and dividends as if you never touched it. Because you didn't touch it. You are using OPM, other people's money, the insurance company's money. Therefore, it is still growing on the full value even though you may have borrowed half of the value. You instead are borrowing against your cash value. Your cash value is the collateral. No other savings vehicle on the planet does this. We finance everything we buy. We either pay interest to someone else or give up interest we could have earned. One of my favorite Nelson Nash quotes. With this tool, you can finance your own purchases through your policy, pay yourself back, which is actually paying the insurance company back, and your full balance compounds uninterrupted the entire time. It is so powerful. Preferred loans at fixed rates and no capital call. This is another benefit I just thought I would throw in. You can borrow against your policy at a fixed interest rate. And with my primary company, you can also choose to borrow at a variable rate if you prefer, but there will be no capital call. The insurance company cannot demand repayment on their timeline. You control when and how you repay, and there is no forced repayment schedule. Living benefits. We can build some disability protection into the contract, not disability that would pay out a benefit to replace your income if you were to become too sick or hurt to work, but a disability benefit that would waive your premiums to age 65 if you were too sick or hurt to work. The type that sends you a check every month while unable to work due to sickness or injury is short or long-term disability coverage. Something totally different and something they can also help you with if you need. The other living benefits are the critical, chronic, and terminal illness benefits. Critical illness allows access to a portion of your death benefit for a major illness, such as stroke, major heart attack, organ transplant, invasive life-threatening cancer, etc. Chronic illness benefits. If you can no longer perform activities of daily living, you can access a portion of your death benefit while you are still alive to help with long-term care type costs. There are 6 activities of daily living, and they are continence, toileting, transferring, dressing, eating, and bathing. A severe cognitive impairment by itself will also trigger these benefits, so like Alzheimer's. There's also the terminal illness benefit. You can access a larger portion of the death benefit if you are given 12 months or less to live. This could help you pay for medical bills, treatment that might even extend your life expectancy, or to go travel the world with your loved ones. And last, but certainly not least, generational wealth and your legacy. Your death benefit will pass to your heirs probate-free, no attorneys, no court delays, just a windfall transfer immediately. After 2 years, the policy is incontestable. Your family's claim cannot be challenged. The insurance company will just need the death certificate. And the death benefit is typically much larger than what you paid in, which can create generational wealth that compounds beyond your lifetime. Mutual life insurance companies have a 200-year track record, having paid dividends continuously through the Great Depression, every recession, every market crash, 2 world wars, and every financial crisis in American history. For 200 years, they've been keeping their promises. Okay, so everything I just described, the guaranteed growth, the tax-free access, the liquidity that lasts your entire lifetime, the living benefits, the generational legacy, this has existed for over 200 years. Now, maybe not every single feature, maybe the living benefits were a little different, or maybe they didn't always have that, but essentially, this product has been around for over 200 years. Banks know about it, major corporations use it, the ultra-wealthy build their financial lives around it, and somehow it never made it to the conversation most of us had when we were figuring out where to put our money. In fact, I just came across an article on yahoo.com recently that had the headline, "Incoming SEC Chair Paul Atkins and his wife have 54 life insurance policies. Why?" And then in the article, I saw this statement. The decision by Atkins to amass dozens of life insurance policies flummoxes even some experts. Well, I can certainly think of some reasons. And after this episode and any other research you've done, I think it's apparent to you as well. So if you are a business owner or someone who has spent years building up your income, you deserve a savings strategy that works as hard as you do. Not one with such strict rules for most of your life. Not one that stores up a tax bill you can't predict. Not one that charges you to manage money you'll never get to keep. The best time to have built your own private banking system was 20 years ago. The second best time is now, today, before another year goes by. So if what you've heard today resonates with you, if you're ready to stop letting someone else control the timeline on your money and are ready to take over the banking function in your life, if you would like to partner with me and as your advisor and coach, I want to hear from you. Feel free to shoot me an email. You can reach me at valerie@alphaomegawealth.com. You'll tell me a little bit about where you are financially, and we'll have a conversation about what your private banking system could look like for you. Don't wait. Time is your greatest asset.
This is thepodcastfactory.com.